Hello everyone, welcome once again with your boy Crow Investor. So in today's video I'm gonna talk about kind of summary of this year and last year and kind of share with you what I learned during this 1.5 year of investing in the stock market. Of course, sorry if you hear me like a little bit off. My voice is, I'm sick, so my voice might sound a little bit different than usual. So this is almost the end of 2021, and I'm gonna talk about certain points, and I hope you follow with me. So first of all, I'm gonna just give a summarize. I started investing in the stock market last year in 2020 in June, let's say, or late May. And when you don't know nothing about stock market, you're just getting in. Of course, you learn with mistakes and stuff like that. But what I learned that year, I didn't learn per se that year, I learned it the hard way the year after, which is 2021. The year of 2020 was a bull market. Like, since the crash that happened in March 2020, the stock market just like went upside. Why? Because there was a lot of printing of money in the US, which drove inflation up and drove money supply up. And those people who had money from the stimulus checks, they piled it up in the stock market, and stock market didn't stop like going up. It was like up after, one day after the other. I made 108% last year from June to December. So I made 107.65 or 68%. So let's say 108% return on my investment that year. My portfolio grew by 108%. This year, 2021, I had like, the whole year this year, and the stock market was a little bit, off, up and down, and I managed to make 58% return on my investment this year. Of course, I'm still down on some and I'm still up on others, but I made nonetheless 58%. The things that I learned this year is that momentum stocks, they stop going up. So whenever you see a stock going up with momentum and there is not really a fundamental reason, or the fundamental reason is far off from reality, the stock is gonna eventually go down. Does this mean that the stock is bad? Maybe or maybe not, depends on the stock. But it gives you kind of, things to think about. I'm gonna give an example. For example, bio-nanogenomics. That was my worst investment ever, because I bought for more reasons at first, but I started buying with the hype. I got like FOMO, and I started buying as well, and I increased my positions a lot, and of course with that the cost price, and I didn't sell when I was up 100%, and I was up $15,000, and I didn't sell. I was like, no, it's going to the moon, to $100. But why? Because I wasn't thinking about the fundamentals of the stock price and the business model and how much that business can grow and the realistic projections of that business. So just hype, and of course I didn't sell, and I regretted it afterwards because it went down. Now it's $3, and I sold at a loss. But why did I sell at a loss? Because I feel it doesn't mean that the genomic space is not good, but it means that there is the business. I don't understand business that much, and the scalability of that business is maybe a little bit difficult to make now, but pretty sure like 10 years from now the genomic space would be something to invest in, or 5 years from now at least. So that was my worst investment. Of course, I made some trades on Palantir, Tattooed Chef, Enphase, PayPal and stuff like that. But one thing that you need to understand is that when I sell out of a stock and I buy something else, or I build my position something else. It doesn't mean that I hate the stock. It just means with the amount of money I have available, I don't have like $1 million or millions of dollars that I can, you know, buy 40 stocks or 30 stocks or 20 stocks or 10 stocks. It wouldn't make sense buying one share of each company. So that's why I sell of some and put some in others, just to make sure that I have it concentrated in my most conviction stocks, and that I don't have a lot of things to think about. Let's take for example PayPal. I love PayPal at these prices now. I love Enphase at this price. I sold Enphase, I made money on it, and I bought back now. I bought 32 shares because I sold out of Tattooed Chef entirely, and BioNano entirely as well. And PayPal, even though I love the product, the company, I'm pretty positive that it will make me money in the future. There is too many things to buy, you know. So I was, you know, thinking, okay, I'm gonna sell Tattooed Chef. What I'm gonna buy? Should I buy Enphase or PayPal? I thought about the future of energy, and I was like, no, Enphase is the better buy for me now. So I bought Enphase. If I had enough money, I would have bought both and built my position in both. But I don't have Meet Kevin money or any other, you know, streamers money. I'm just like, you know, struggling to get through this shit. So this is why I made 58% this year. Is it good? Of course, it's superb. Am I down on most of my stocks? Absolutely. I'm down on Palantir, I don't know, 16%, 17%, something like that. I'm down on Corsair, I don't know, 20%, something like that. I'm down on something else. What was it? Enphase. I'm down on Enphase now, 5% or something. I'm down on, no, okay, that's all. And of course Tesla is my biggest position, and Tesla is kind of balancing my losses. So it's pretty obvious that 58% that I made this year is mainly Tesla, with a little bit of trading, you know, during this year. So what I learned as well is that patience is key. You should be patient. Don't just like go out of the stock just with reactions, you know. And you need to build your positions as well, like sideline money or cash on sideline in case something happens. Even though sometimes it doesn't look like things will, you know, like shit will hit the fan, but it will eventually. Stock will pull down eventually, and you need to be prepared for that. Mentally, you need to prepare for that, and you know, money wise, you need to prepare for that. And I see the same. I see same issue in NFTs now, because I see that there is a lot of hype in NFTs. Everything is expensive, and I'm thinking like, man, maybe these people don't know how the market works. Like at one point everything will go down, or 98% will go down, you know, down the toilet. And you know, people who are used to that kind of pressure will stay, and people who don't will sell out. And you know, that's how human works and the psychology of money works. So this is like my kind of summary, that I made 108% last year. This year 58%. I hopefully will make an average of, I don't think about it too much. I don't say about the percentage. I just made the calculations now, because I don't put too much emphasis on how much I made, like percentage wise, on the whole year. I just thought about it now. I was like, okay, I'm gonna make a video about it, because I didn't know actually. So I just make calculation, so that I made 108% last year and 58% this year. I'm down a lot on Palantir, of course, Corsair. Do I think that it might go up on 2022? Maybe, but that's why I have Tesla as a balancer. You know, if Tesla is gonna have really awesome year this year. Elon Musk, he just, you know, finished his sales of his stock options. So now there is no pressure for the stock to go down, and there is a lot of positive catalyst for the Tesla company or the stock this year. And there is Berlin opening, Austin opening, maybe starting a little bit of Cybertrucks, of course in low volume, but nonetheless something good. Maybe semis as well, low volume. and you know there's a lot of improvements in the FSD and stuff like that. So please be patient, build your cash positions. That's what I'm gonna do from now on. So from now on I'm gonna build my position. I don't have any money now, so I'm just gonna build from scratch, and with the small amount of income that I could save, me and my wife, we are trying to make the best out of it. And let's see how it goes. We're gonna build our position from now to maybe half of next year, 2022, and of course, and see how it goes. If the market dips, we're gonna buy. So of course, if it doesn't, I'm gonna build my position to at least 10%. It's really difficult to build it to 30% because we don't have any other income other than our actual our job, normal job, and we have a lot of expenses with my daughter and with the house and stuff like that. So we can't build it to 30% because 30% means I need, I don't know, 330, I think $40,000 or $30,000 or $35,000 like cash, and I can't afford that. So yeah, unfortunately. So I'm gonna try to build my position how much I can and try to get it at least to 10% to be on the safe side. I hope you are doing well. I hope you are having a really wonderful year. I hope you are making profit. If not, be patient, search the companies, and invest in things that you believe in. Thank you for watching me. Thank you for all who have been following me this past year. I started, I think, in January. Now it's December. It's a year now. Time flies fast. I haven't made as many videos as I wanted to. I made maybe 42 videos up to now, but next year is gonna be a new year for me. I'm gonna make more videos and hopefully more content for you guys. So invest safe. Bye bye.